Hello guys, what's up? I am Lance Oret and welcome to my channel Finance with Lance. In this video, I'll bring to you 4 monthly dividend stocks. And these are stocks you can consider for your portfolio if you're an income investor. No, dividend investing is not for everyone if you're looking for fast growth. For those who have large amount of capital and you want to generate monthly income, dividend investing is for you. These dividends can be used to pay off bills or pay off a car note or any monthly obligations. Before I go any further, please subscribe, like, share and hit that bell notification because that will help out this channel to bring information to other persons. If you are outside the US, from the Caribbean or Africa or elsewhere, you can buy international stocks with interactive brokers. The link is in my bio. Number 1 on our list today is Pembina Pipeline. This is a company that transports hydrocarbon and natural gas primarily in Western Canada. The company also owns gas gathering and processing facilities, and they process natural gas liquids, and they are in the business of logistics. At the time of this video, Pembina Pipeline was trading for $32.58. The company has a market cap of $18 billion and is at a price to earning ratio of 17. The company currently has a profit margin of 14.4% and operating margin of 21%, return on equity of 10%, and last but not least, we're going to talk about the dividend. The dividend at this moment is 5.8% and a trailing dividend yield of 7.73%. The company is traded on the New York Stock Exchange under the ticker symbol PBA, and the roots of the company can be traced back to 1954 when the Pembina Pipeline was built to serve the Pembina oil field in the region of Drayton Valley, Alberta, Canada. The company is also traded on the Toronto Stock Exchange. Number 2 on our list today is EPR Properties. EPR Properties is a leading diversified real estate investment trust. The company currently operates in 358 locations in 44 states and Canada. The company is currently traded on the New York Stock Exchange at a price of $38.83. Under the ticker symbol EPR, the company has a market cap of $2.9 billion and currently traded at a price to earnings ratio of 21 times. Forward dividend yield is $8.50. The company's current experiential portfolio includes theaters, eat and play, attractions, ski park, gaming, experiential lodging, cultural and fitness and wellness. In terms of their education portfolio, they have private schools and early childhood education centers. Over the years, the company has experienced steady growth in their revenue and income. Other from 2020 when there was a pandemic and a lot of places were closed, so the company revenue fell off in 2020, but the company is currently recovering. A little earlier I mentioned about the price to earnings ratio. Well, instead of the price to earnings ratio, we should use the funds from operation, because for real estate companies, it can be distorted to use the price to earnings ratio. EPR funds from operation ratio is right now at 7.60. Before I get into the third one, I'm going to give a definition of Realty Income Trust, because that's what our third choice is. A Realty Income Trust is a type of special purpose financing vehicle which let investors partake in income generated from gas deposit, oil wells and coal mines and other energy producing concerns. They are most often found in Canada. Also, there are some in the US. So our third company on today is Cross Timbers Royalty Trust. This company was created in 1991. The company has operation in Texas, Oklahoma, New Mexico, and other parts. So the company has oil and gas wells in all the locations I mentioned previously: New Mexico, Texas, and Oklahoma. And with the price of oil skyrocketing, this company will look to cash in of the current oil prices that's affecting the market. The company is traded on the New York Stock Exchange under the ticker symbol CRT, and at the time of this video, the price was $23. Data gathered from Stocks Unlocked show that the company has a dividend yield of 7.7% and a dividend 5-year compound annual growth rate of 6.5% and a free cash flow payout ratio of 91%. So the company pays out 91% of its free cash flow, which is all the cash it gathers or generate after capital expenditure is accounted for and paid for. The company currently has no debt and share hasn't increased or decreased. In terms of profitability, the company has an operating margin of 91% and a net margin of also 91% and a cash conversion of 97%. So number 4 on our list today is Realty Income Corporation. It's traded on the New York Stock Exchange under the ticker symbol O. The company is a multi-dividend company and is an S&P 500 company dedicated to providing stockholders with dependable monthly income. So this company really, the focus is just use real estate properties to generate monthly income for investors. The company literally describes its mission as to invest in people and places to deliver dependable monthly dividends that increase over time. And the company vision is to become a top 5 real estate investment trust, creating long-term value for stakeholders globally. Realty Income Corporation has a market cap of $38 billion and it has a forward dividend yield of 4.78. The company has experienced steady growth over the last 5 years. Revenues has increased by 61% and net income also has increased by 55% and book value has increased by over 100%. Now when it comes down to the REIT specific metrics, funds from operation has increased by 69% and funds from operation as a percentage of earning is 355%, which is very good, and the funds from operation margin is 71%. In terms of funds from operation payout ratio, it is 87% and it was flagged as bad, but there are laws in place that state that REITs must pay out most of its cash, so this really isn't a red flag as it would seem. Realty Income's top industry is grocery store, convenience store, dollar store, restaurants, drugstores, casual dining, home improvement, health and fitness, automotive, and general merchandise. So they are well diversified. Some of their popular grocery stores include Walmart, Costco, Dollar General, and you also Amazon, and you have Dollar Tree. After skimming through a list of 30 stocks, after doing a pre-screening, these are 4 of the best stocks in terms of financial health, consistency, and growth. I am not a licensed financial advisor, so please do your due diligence. I hope you enjoyed this video. Please share and like and subscribe to my channel. See you in the next one.